Jio Financial is still not like other shares. There are still conditions which apply to its trading. We're joined by Sakshi Batra, who tells us more about this. Sakshi, first, why did the Jio Financial stock hit lower circuit today? What really happened?
That's right, Abba. Jio Financial Services, the financial services arm of Reliance Industries, did make its debut on the D Street today. Now, while it had got listed almost at the discovered price of 262 rupees on the NSE and slight premium of 265 rupees on the BSE, it did slip 5% on day one to hit 248 rupees per share on the NSE. Now, despite this drop, remember that the stock has ended as India's second largest NBFC, and that's just behind Bajaj Finance. Now, analysts had already flagged earlier the limited potential for the significant price movements on day one, as the stock would be limited with the 5% circuit limit. Also, experts believe that there may have been short-term selling pressure from arbitrage players who may have purchased Reliance Industries stock as a unique opportunity to just acquire the one free share of JFSL for each RIL share that they hold. Now, shortly after the stock's debut on the exchanges today, a series of block deals also ensued, and as a result, the shares of JFSL swiftly reached the lower circuit limit of 5%. Remember, the brokerage firm CLSA had also earlier indicated, even before the markets had opened today, that its India-focused portfolio will exit JFS at the first 30 minutes weighted average price, since they do prefer banks. And so likewise, many investors who were not inclined to retain the holdings in financial services sector may have decided to secure their profits, and therefore the fall that you've seen today.
Right. So, Sakshi, now what? How can one trade this stock if they're interested?
So, our Jio Financial Services listed as the 51st Nifty stock today and the 31st Sensex stock today. So, over the next 10 days, JFS will be actively traded in the trade-to-trade segment, which actually means the shares of JFS can only be purchased for delivery, and stocks that are traded under T2T segment are not eligible for intraday trading. And they also have upper and lower circuit breakers of 5%. And this is unlike the other Nifty index stocks, which do not have circuit breakers, as they actually trade in the derivative segment. Now, the stock will remain a part of the Nifty 50 and the Sensex and the other indices only for a temporary period now. The stock will be removed from the indices on Wednesday evening, that is T plus 3 days, provided it does not hit the price band for the 2 consecutive days. So, in case like today, during the first 2 days of the 3 days, the stock does hit the price band on both first 2 days, then the exclusion date will get deferred by other 3 days as well. The stock has hit a lower circuit today, so it will remain to be seen whether tomorrow is another day that the stock hits either an upper or a lower circuit as well. The stock after the 3 days, or maybe the deferred days, whenever we see that, will then be eligible to get added on the indices in the next cycle, depending on the eligibility criteria like market cap, liquidity. And whenever the next review happens is when we can expect Jio Financial Services to get permanently listed on the exchanges.
If you like the video, do like, comment, share and subscribe.